Now, as we're just talking, higher oil prices as well as lower consumer confidence sending the dollar lower today. This against the euro and the Japanese yen. My next guest says this is going to continue. Axel Merk is the president of Merk Investments, and he joins us now from Mountain View, California. Axel, welcome back.
Good to be with you again.
So what happened? I thought that the dollar was going to pose some kind of a rebound, but now you're saying don't look for it?
Well, it just means that all your pundits say is not always the case. We had a little bit of a reprieve after the Federal Reserve stopped lowering interest rates. At least they indicated to do so. And what people don't realize that this is not the end of the game. We're not out of the woods yet. We have inflationary pressures building everywhere. And the Fed may talk about fighting inflation later on this year, but they're not in a position to do so. There's too much leverage in this economy. If the Fed was to raise interest rates, it would throw the country into a severe recession. And people are starting to realize that banks haven't cleaned up their balance sheets and that the old A problem, for example, in the mortgage sector, hasn't even become to be a severe problem. All these things are going to impact economic growth in the U.S., and it's growth what the dollar needs. That's the only way that we can finance our current account deficit. And if we don't have the growth, then the dollar is going to go back down, and I believe that in the medium to long term, the dollar is going to be substantially lower.
Then Axel, tell us, though, what about the euro? Isn't there a hint that they are going to lower rates, that the ECB will look a little bit further afield than what's going on in the German economy and start to lower rates?
Well, first of all, the German economy, they just had higher than expected GDP growth, and then more importantly so, the European Central Bank is getting very vocal that these new facilities that have been put in place to help banks are being abused by Wall Street, that Wall Street is actually packaging new debt obligations just for the purpose of placing them with central banks because they have an open checkbook right now. And the European Central Bank has made it very clear they're not going to tolerate that. And that means, if anything, we're going to have a tighter policy going forward. And the European Central Bank has said repeatedly that in times of distress, you need to make sure that inflationary expectations remain firmly anchored. The opposite of what the Federal Reserve has said. And everybody thought, oh, now as the European economy may slow down, the European Central Bank is going to lower rates substantially. I don't think so. They may lower them a tad later on this year, but still, inflation is the primary concern, and I believe we've only seen the beginning of the inflationary pressures building, and this is not the end of the inflation fear that we have around.
Axel, what are the prospects in your mind for various currencies around the world decoupling from the dollar, not maintaining the peg? What happens if we see that?
Well, there are all kinds of very interesting dynamics happening. I believe, talking about the decoupling, you're talking about Asian currencies. Currencies in Asia, or countries in Asia at the higher end of the value chain, I'm specifically referring to China here, they benefit the most from allowing their currency to appreciate. All these countries in Asia have enormous inflationary pressures, but they do not have the subprime problem. And so if you're at the lower end of the value chain, a country like Vietnam, they can only compete on price. And so they may be tempted to engage in some sort of competitive devaluation. But if you're at the higher end of the value chain, China in particular, they benefit the most, and they have pricing power. They have been able to raise prices substantially year over year. So I believe the Chinese yuan is going to benefit, and the Chinese are putting all the tools in place to allow.
Axel, I'm just going to put. We've got a commercial to put in place, but we're going to come back more with Axel Merk on currencies when we continue our discussion. You're watching Taking Stock on Bloomberg. Welcome back to Taking Stock. I'm speaking about currencies. My guest, Axel Merk, he is the president of Merk Investments, joining us from Mountain View, California. Axel, let's turn north of the border of the United States. Let's talk about Canada and the loonie. As we were talking during the break, a loonie showing a lot of strength, even though the Canadian Central Bank actually lowering rates. What's up? Is this just commodity-based?
The commodity story is a big factor in that. The Canadian Central Bank has been very concerned about its export to the U.S. and been the most aggressive of the Western central banks to lower interest rates, and some people wrote off the loonie. But at the same time, fundamentally, Canada remains very strong, has the commodity story, and versus the U.S. dollar, I take the loonie any time, and especially on weakness, we have been buyers of the loonie and much preferred, especially versus Australia, the other commodity play out there. Canada with a big current, Australia with a big current account deficit is much more vulnerable and going to be more volatile going forward. So we much prefer Canada right now.
All right, so the Canadian dollar, you'd buy that, you'd sell the dollar, the U.S. dollar, you think that's going to fall, particularly against the euro. Let me ask you about the Japanese yen. What are the prospects there for a rate increase from the Bank of Japan?
Well, they have the leeway to do that. In my view, the economy there has long been able to stomach a rate increase. There's just not been a willingness at the Bank of Japan, first because of lack of leadership, but also because of other political parameters there. But now we have inflationary pressures building there. The economy is a tad stronger than expected. So I would caution all these carry traders not to fund their trades too much in yen, because we might just see tightening. We might see the yen go higher. It's a bit less predictable than in other countries are, but there's certainly the risk or the opportunity, depending on where you are on that trade, for the yen to appreciate in the coming weeks and months.
So Axel really only put on one half of the carry trade. Would that make sense?
I would discourage people from the carry trade. We had markets calm down. A calm market is what the carry trade thrives on, but I do believe volatility is going to return with a vengeance, and then that's pretty much the enemy of all the carry trades. So I'm not a fan of the carry trade, and I cannot advise anybody to try to play that. We much rather favor baskets of currencies to get long-term exposure rather than leverage bets based on any carry trades.
Axel, my last question, I'm going to take you all the way to Iceland. What is going on? They needed some money from the Nordic Central Bank. What is happening with the Icelandic krona?
Well, these are fashion currencies as far as traders are concerned. I mean, these are very real currencies for the people who live there. But anybody engaging in these types of currencies have to be aware that the liquidity is thin when times get tough. And so this is nothing that we would encourage any retail investors to get engaged in.
Okay. Well, we're going to have to leave it there with that word of caution. Thank you very much, Axel Merk, the president of Merk Investments, talking about the Japanese yen, the Icelandic krona, as well as the euro and the U.S. dollar and the loonie. Here's what's coming up on the program on Monday with consumer confidence.